Hello, everyone. Thank you for joining us today. We're going to let some folks come into the room, and we will begin shortly in about 1 or 2 minutes here. Again, thank you for joining us today for our Small Business Tax Prep 101. We do want to remind everybody that today's webinar is being recorded. I'll go over a few virtual housekeeping rules really quickly. Today's webinar, for the webinar, your microphones and videos will be turned off. Following the presentation, there will be questions answered from the presenter. We suggest that you put your questions in the Q&A box, and we will pull your question from there. Just as a reminder, the host and the presenters are still working remotely, as most of us are. So if you could excuse any background noises that you may hear. And last but not least, for technical issues, you can email myself, Marina Whitted, or Hallie Holmes. Our email addresses are right there on the screen. I can also put them in the chat for you guys as well. And at this time, I will turn the presentation over to Yvette Banfield to do the welcoming and introduction.
Hi, good afternoon, everyone. We're delighted that you're joining us today. I am Yvette Banfield, the Vice President of Economic Development Policy here at CNHED. And we are delighted to kind of kick off our first kind of workshop this year focused on Small Business Year-End Tax Prep 101. As many of you know, tax season is just starting and we'll be kicking up and getting up in high gear soon. And we wanted to make sure that small businesses were aware of some of the things that they need to be considering and thinking of as they get prepared for this tax season. And so we're delighted to have, and so before I introduce our presenter or speaker who will be guiding us through what you'll need to know as a small business owner, I wanted to just lift up a couple of things for the small businesses that are joining us today. And some of this information may apply to you and some of it may not, but, and if you know of other businesses that you think might be able to benefit from this information and these resources, we encourage you to please share that information with them. So we have been sharing and promoting a few opportunities that are made available to small businesses. One, we wanted to point you to CNHED's Guide to Small Business Financing, which is on our website. It's for small businesses that need to know about financing. And this information provides you with just a rubric on just the whole process, but also it provides you information about local lenders in the DMV area or in the district. We also wanted to make sure that you are aware of a couple of resources, grant opportunities. Monday, DMPED released information about their COVID-19 Small Business Relief Grant. This is for small businesses, particularly those that have not benefited from the funds that were made available last year. And so we really encourage you to go to the link at some point later today and check out those resources. It's the Small Business Relief Fund. Also, the Great Streets Grant for any businesses that are retail businesses. You're located on a commercial corridor in a Great Streets corridor, and we encourage you to take advantage of that opportunity. The deadline for that program ends the end of this month, January 31st. And then also the district, DMPED specifically, also has a fund for commercial property acquisition. So for any of you that are on the call that are interested in purchasing property, or you're in that position where you're considering it, we would encourage you to check out that resource too. Then the last two things I just want to just mention before I hand it over to Mallory is that this is agency performance oversight hearings. This is the period where you get to kind of weigh in and talk about the issues that that are concerning you as a business owner. And we encourage you to take advantage of that opportunity to reach out to council members. And so also go to CNHED's website as well to learn, to hear about what the schedule is and to figure out how to learn the information about how to sign up. So let's get to the business at hand for why you have signed on today. I would like to introduce to some of you. I think some of you are already familiar with Mallory, looking at some of the comments in the chat. So we're delighted that you're joining us if you already have a relationship with her. But for those who are meeting her for the first time, Mallory or Corlett is the CEO of Office Accomplice. She is a strategizer, a problem solver with over a decade of experience advising advising and systems analysis. She specializes in providing expert bookkeeping services and the information that clients need to take to make critical decisions regarding their business. She has, if you go to her website, she talks about how she basically wants to give you time back. And so instead of you struggling, trying to figure out your own bookkeeping issues and challenges, she is the person that you need to connect with to be able to get more of your time back so that you can run and operate your business. And so we're delighted that she is sharing with us tidbits and key points that you need to know as you're going into this tax season period. So with further ado, I'm going to turn it over to Mallory. Mallory, take it away.
I have to unmute. It's like the beginning of the pandemic. Hello, all. I'm excited you're here to join us. And I'm excited to be speaking to you about small business year-end tax prep. So the way we're going to do this today is we're going to talk about first selecting the right accountant. Then we're going to talk about prepping your financial information, making sure it's ready to go. And then we're going to talk about setting yourself up for success in 2022. If you have any questions, there's a Q&A button at the bottom. We ask that you put your questions in the Q&A because it'll be easier for us to pull them out. If you forget and put them in the chat, I believe someone will remind you to put them in the Q&A, but if you could just put them in the Q&A, and then at the end of this, I will answer as many questions as we can. Any questions that we don't have time to answer today, we will collect, and then I'll answer written, and then we'll send out. You are also always welcome to reach out. There is a contact form on my website, officeaccomplice.com. The website's on every page of this presentation. And so you can also, if you have any questions, just reference that you came to this so that I kind of understand where your question is coming from. And then I'm happy to help in any way I can. So let's get started. First, selecting the right accountant. So the first thing you want to do is really think about what Are your taxes fairly simple, or are they a bit more complicated? Kind of the easiest, the simplest taxes are, you are a single person who does not own anything and has a W-2, and that's it. There's no investments. And that's for that, you don't need a ton of support. Obviously, the more you add to that, you get married, you have children, you buy a house, you have investments, you start your own company that's either an LLC, that's a pass-through entity and goes on to your taxes directly, or you start a company that functions as its own corporation. You can either do that as an LLC that becomes an S Corp, or that's typically how anybody on this call would do it. There are also, you can form a corporation, but that tends to be a bigger commitment. But if you're an S Corp, then to be paid by your company, you actually have to be an employee of the company. So you get a W-2 and a K-1. So as you can tell, there's just a lot of different options, and you want to be really clear with yourself about what services you're looking for. And you want to be really clear with the person you're looking to hire. Everything is fairly simple. I'm going to hand it to you fully done. Hey, I don't have any sets of books. About 50% of the people on this call did not answer that they track their financials in any system that would generate reports for the accountant. So how are you going to get them the information on your income and your expenses for your business? Are you going to hand that to them, or do they need to go through your bank statements to figure that out? All of those would feed into the service that you are seeking. What level of service are you seeking, and how are you thinking about it? And be honest with yourself and your accountant about the current state of your financial information. Wishful thinking will not be helpful here. Rarely is anywhere, but will not be helpful here. You want to be honest, because you want the accountant to be able to be able to give you a really good quote on what the services are going to cost. If you choose not to, if you can't give them a clear idea of the work they're going to be doing, then they can't give you a clear idea of how much it's going to cost. And B, you want to make sure that you are also, they don't expect all of the information to come in a specific way, and then they don't think to ask for more information. There's a little bit more hand holding the less together your financial information is, and that you want to make sure your accountant's on top of that. So you need to be honest about what services you're looking for, what your situation is, and that will be affected by where, if you have a spouse that has a certain number of things going on, all of that plays into this. Okay. The other thing, or another thing when selecting the right accountant, is people tend to think of taxes as being very set in stone. This is legal and this is not legal. There is actually a lot more gray area than most people realize. We're all familiar with great examples of tax fraud, and you definitely shouldn't work with someone who is going to do that. But there are sometimes gray areas of what is allowable. Dry cleaning is a really great example. If you get a lot of presentations for work, could you include your dry cleaning? I've worked with accountants who say, of course, and accountants who say absolutely not. You want to find and identify an accountant who has a very similar, if not the same, level of comfort with those gray areas. We have clients who want the minimum, they want to know for a fact that anything that they took as a deduction was 100% allowable. And those people need to work with accountants who are going to be able to do that. And then I have people who are like, but like, if you really read the code, could you find a way that it would make sense that we could argue it? And if that's your goal, then you want to make sure that you're working with someone who feels similarly. There isn't a right or wrong answer, except for fraud. Fraud is the wrong answer. Don't do fraud. But you want to make sure that you're working with someone who has a similar ethos to yours when you're looking for an accountant. The other thing that I want to say about looking for an accountant in this moment in COVID is be patient. I am hearing across the board from all of the accountants we work with that they're having lots of issues with hiring and finding the people to do the work right now. And so if someone doesn't get back to you immediately, also recognize that this is the busiest period. So accountants are super busy. So corporate books are required to be filed by March 15th. Well, let me take a step back. Estimated payments for end of year 2021 were due January 15th. Corporate books need to be filed by March 15th, and personal books need to be personal taxes need to be filed by April 15th. What that means is that starting at the beginning of February, they are getting a ton of data from everybody trying to get those corporate books done, and then separately also trying to get the personal books done. So there's just a lot going on with all of the with everyone right now, and you want to just be patient, give a little grace, and recognize that there's just right now there's just a dearth of people to do the work. Those are the things that I would recommend you think about when selecting an accountant. In terms of, I went backwards. In terms of what you need to do to prep your financials for the year end, like I said, about 50% of you are using some kind of software. 40% of you are using QuickBooks, and the other 10% are using a variety of other options. You want to make sure, if you're using QuickBooks or any of the other options, that you reconcile accounts. That means that you're not just trusting the data feed that comes in automatically, but you're comparing it to the bank statement. I have had bank feeds come in double. I have had 2 weeks at a time get skipped, that if you're not paying attention and you're not looking for it, you would miss it. So it is worth going back and looking for that. The other thing that a lot of people miss is reviewing reports to make sure they generally look right. So you want to make sure that you look at your reports that are coming out of your software and say, okay, does this make sense? Hey, why do I have an enormous miscellaneous expense? What is that? There should really never be a miscellaneous expense. It's a little bit like a junk drawer. It doesn't tell you anything. So what I would always recommend is find a different bucket to put it in. And if there isn't a good bucket, then create a bucket that makes sense for your business. Is there any income that looks out of whack? Is there anything that in general you would have questions about that you can then dig into and figure out why these things don't match? You also might want to look at it and think to yourself, are there any categories that are too close together to be useful? So one that I see all the time is travel and transportation. And people, if there's two categories that tend to be too close together, they use them interchangeably. If you're really clear on what those categories mean, so just as an example, travel can mean anything out of town, and then transportation can mean Uber, Lyft, taxis. Just that's how I've seen it done in a couple circumstances. If that's the case and you're really clear and you're really consistent, then those are really helpful categories. If you are not very clear and very consistent, and you are not really sure what your categories mean, it's worth digging in and figuring out and just making sure you're not double counting anything, or anything is somewhere where it shouldn't be. The other thing you need to do, or another thing you need to do at year end, is determine whether you need to send 1099s to anyone. The criteria for how you know if you need to 1099 someone is it's an individual or LLC, not a corporation. You do not need to 1099 any corporations that you paid more than $600 to in a year for a service provided. So a bookkeeper is a great example of someone that you would need to 1099. You do not need to 1099 someone if they provided a product, and you do not need to 1099 someone if you paid them with credit card. So if you paid for a service, but you paid via credit card, you do not need to send a 1099. If you paid with a check and you paid more than $600 to an individual or someone with an LLC, so it's taxed as an individual, then you do need to send a 1099. The way you get the information you need to send the 1099 is you have the person fill out a W-9. And that's a form that if you just Google W-9, it'll pop up, and you can send them out, and then they'll send them back to you. And you need the name and the address and either their social security number or their EIN, the employer identification number that the IRS assigned to them when they created their LLC. One of the funny things about 1099s is you have to 1099 any law firms for legal fee paid, even if they're less than $600. So legal fees are the exception to that $600 rule. You always, even if you paid $5, if you have a lawyer that you paid $5 to, I would love their name. And even if you paid $5, you need to send them a 1099 for all lawyers. Rent is also considered a service. So if you paid rent to someone, you need to 1099 them. Things like WeWork, you're not actually paying rent. You're doing some kind of buy-in share, so you do not have to send them to the WeWorks of the world. And all 1099s need to be sent by January 31st. There are some really great services out there that will take care of sending them for you, filing them with the federal government. So what sending them means is you have to send them to the individual who worked, and then you have to send a copy to the federal and state governments in which that person worked. So we use a company called Track 1099, and it's literally track1099.com. And it's really easy to upload the information and send them out from there. And they're not expensive at all. I think it's like $3 per 1099 or something. It's really not expensive and totally worth not tracking down all of those forms and printing them out and manually sending them. Your time is worth more than $3. The other thing in terms of prepping for the year end, you want to make sure that you have all your documents together. This is something I see a lot, that people send over 75% of what they need to pull together. They don't remember to get their 1098 for their mortgage statement. They don't remember to get the documentation from their investment. They don't remember to send over their kid's social security number and birth date so they can get their kid on there, so they can take that deduction. And what you don't want to do is have your accountant do your taxes twice. So you don't want to send a bunch of information and then have to send more information later after your accountant has already done your taxes, and then they have to go back and redo them. It's a costly mistake to make, and one that you just don't want to make. So make sure you have all your documents together. Really think about, sometimes what I'll do is go through my spending and just go, oh, I paid interest here. I should have some documentation on that interest I paid. Or I paid, Oh, right. We invested in this thing. Should I have a K1 from them? You should just have a sense. It would actually be great if, as you spent the money through the year, you went ahead and saved it. For example, anytime I donate any money for any cause, I always save the receipt in a folder so that I don't have to go back and figure out what donations we made over the last year. I just have it all saved right there. That type of thing that will help you a lot in terms of your taxes. Now, setting yourself up for success in 2022. Everyone thinks that the numbers are just numbers and they don't have any greater value than that. They'll help you file your taxes. They'll help you understand what, whether you made money or whether you lost money, but they don't have any other value. But it's not true. They actually tell the story of your business. So what story do your reports tell you? Are you great at doing the work, but not collecting the money? What process change can you make to solve that? I would start by reviewing, if you have reports, by reviewing your year-end reports. And if you have QuickBooks, then those will generate automatically, or Wave, or you need a budget. All of those will generate them all automatically. Or you can use your tax returns. On your tax returns, on your Schedule C, which is the page that's going to be dedicated to your business. If you have an LLC, on your tax returns. If it's an S Corp, it'll be the entire tax returns for your company. The income and the expenses are separated out and categorized. So even if you don't have reports, take that Schedule C and look, what cash came in? Where did your money go out? Was your spending in line with where you think it should be? Should you have a budget for the next year? And spend some time looking at those reports. Use those to inform how you would like to build your business this year. Which parts of the story do you love? And how do you expand those? Which part of the story would you like to change? And how are you going to change it? If you haven't been tracking your financials well enough to be able to read the story, how are you going to go about making sure that you have that this year? So I'm in QuickBooks all the time, right? So I understand that it's easy for me to use QuickBooks and that it is a very confusing software if you do not know what you're doing. But I don't find the Schedule C particularly helpful when I want to do my planning. It's what I would use if I didn't have anything else. But I would recommend making sure that you use your data to build your plans for this year, and make sure you have systems to capture your financial data for this coming year. So if you are looking at this, and even if you're in QuickBooks, if you're looking at it and you're like, well, but yeah, I can see my income and my expenses, but I don't have any sense on what I spent on all of the books I had to buy to do the research for this client. Well, then you need to be reevaluating how you're tracking your expenses, because it's not telling you the story in a way that is helpful to you to hear. So you need to think about, what are the ways I would want to track my business? What are the levers I would use to either manage my spending or increase my income? Those are the two levers on a very fundamental level. That's it. You can either increase your income or reduce your spending if your goal is to make money, which I think that's most people's goals in business. I did notice that we had Tax Act here, so I'm assuming we have a couple nonprofits, and obviously that is a slightly different situation. But even in a nonprofit, you want all of the income to go to the services you're providing or whatever you're raising the money for. You don't want the money to go to Zoom, as an example. So make sure that you're tracking your money in a way that you can see it. For the people who are tracking in Excel, make sure you're coding your expenses in the same way so that when you sort by expense, you can see exactly where your money's going, and make sure that all of your spending is in line with the spending you would like to see, and make sure that you're collecting the income that you deserve to be collecting for the work you're providing. There is a saying that the best time to plant a tree was 20 years ago. The second best time is now. While your 2021 books might not look exactly what they want you to, like you want them to, the change needs to start today if you don't want to feel the same way about 2022. Okay, what's happening? There we go. Okay, so that's the end of my presentation. I hope that this was helpful to everybody, and I'm happy to answer any questions.
Fantastic. We do have a few questions. So thank you so much, Mallory. Starting off with a question from Megan. She says, does TurboTax count as an accountant? And any reason not to use it?
TurboTax does not count as an accountant. TurboTax is a fantastic program that is based on algorithms, and that is based on kind of the most conservative version of the deductions you would be allowed. I would highly recommend TurboTax for anybody with a very, very simple tax profile. Remember, we talked at the beginning about how you need to be really clear on what your taxes, like how difficult your tax profile is. I would recommend TurboTax for anybody who is in a fairly simple tax profile. The more complicated it gets, the more I would recommend you work with an expert. Just like anything else, if it's simple, software can do it really well. But if it's more complicated, the software is going to default to what works best for the IRS, which often is not what works best for the individual.
Fantastic. So the next question is from Chris. It's more of a question statement. Need assistance with dissolving an LLC, LLC/S Corp in near future, in the first quarter. So I don't know, it's not really a question, but I don't know if there's an angle there that he needs to know as he's preparing for his taxes. And I would encourage you, I don't know who you could refer or suggest that he talk to with assistance in doing that.
His accountant would be the best person to talk to about that. I believe there's a checkbox essentially on every form that you fill in with the IRS that says, is this the final filing? And you would want to make sure to check that at the end of 2022. If you're dissolving in Q1 2022, you will still need to file taxes for all of 2022, even if there's no activity after Q1. So you can get kind of most of the way to dissolving the entity, but you then need to file that final set of taxes before you fully dissolve it.
The next question is, if your business is a registered LLC in DC, but you have subcontractors who worked virtually from other states, do you have to file their 1099s in their states or in DC or both?
I will be totally honest, Track 1099 does that for us. I believe you have to file in the state that they live in. So it's actually not the state they do work in, but it's the state they live in. And the idea there is that you have to, the whole point of the 1099 is to make sure that the government knows that these people were paid to do work. And so from a tax perspective, you don't have to file them in DC. I'm revisiting what I said now that I've thought it through. You don't have to file them in DC because DC doesn't care. They're not going to pay taxes in DC. You do need to file them in the state they live in. But Track 1099 or any other service should take care of that for you.
Do you recommend QuickBooks class or wing it on your own?
I actually, the way I started this business is I bought QuickBooks for Dummies. I had no bookkeeping experience. I actually did events in a previous life, and I bought QuickBooks for Dummies. And I found that to be really, really helpful when I could go where I could go look up information. I have not taken any classes. If you learn better through classes than you do through reading, we've had some success with lynda.com. It has a new name, I think now, but if you go to Lynda, LYNDA.com, I think it reroutes you to the new organization. And they have all kinds of fascinating classes. I would say a lot of it depends on your comfort with software. If you're a person who is really comfortable jumping into a new software and figuring it out, that you would probably be fine. But if you're really not, and you really prefer a step-by-step process, then class would be a great idea.
Now, you may be able to decipher this. I think the question is based on something which you presented on. What is considered simple under 10K in business?
So what I mean when I say simple is not necessarily a number, but is how well organized and how easy is it for the accountant to process your information. So if you have under 10K in business, but you don't have any books and the accountant has to go through and figure out your income and your expenses from a bank account, especially if that bank account's a personal bank account where your personal stuff's captured in there as well, that is not simple. That is time consuming and complicated. If everything is super well organized and you can hand it to them and you can say, even if you're making $200,000, but it's all fairly clear and fairly well organized. There's nothing in there that requires a ton of backup. So just as an example, like if you have payroll, a lot of accountants will then ask for reports to back up that number just to make sure that the numbers tie. All of that stuff, of course, anytime there's more stuff adds time. So I would say simple is not about a number, but is more about how clear and concise your financial information is.
So Carla asks, if I'm married and self-employed, who should I file? Married or how? Excuse me. Married or married separate? So should you file together or?
So that's where we get into tax questions. And I want to be so clear. I am not a CPA, so I don't do taxes. I work with a lot of this stuff all the time. So I kind of am around it, but I don't do them myself. That actually is also going to depend on your income levels for you and your spouse. So individually, are you in vastly different tax brackets? Because if so, married filing separately might be the better option. If it doesn't bounce you into another tax bracket, then married married filing jointly would probably be fine. But it's not about the self-employment itself. It's more about tax brackets and what's more advantageous for you as a couple.
Okay, great. So this question is this individual is asking this question is not as a business, but as a nonprofit. If a nonprofit has yet to make any money or provide service under their 501c, is there a need to file taxes? Would this be true for a for-profit business if you know you've lost money because you've spent and invested, but you didn't make any income?
Okay, so I'm going to answer that as two separate questions. For a 501c3, you will lose your nonprofit status if you do not file every year. However, if you've made, and it's not, you don't file taxes in the typical way, you file what's called a 990. If you've made below a certain amount, and I don't remember off the top of my head that amount, but if you've not made any money yet, it's almost certainly below that amount. You can file what's called a 990 postcard. I think it's literally 3 questions. Oh, someone just answered it in the chat. It's $50,000. If you make less than $50,000, if your nonprofit makes less than $50,000 in income, not net, but in income, then you can fill out what's called a 990 postcard. And it's like 4 questions. To be totally honest, we've never done it because no one would ever hire us to do that. It doesn't make sense. Once your income is greater than $50,000, then you do a full 990. But until then, you do have to file that 990 so that they are aware of what's happening. Even if it's just that postcard. For a business, yes, you still need to file taxes for the business, even if it lost money. It just reduces your tax burden. If your tax burden is already 0, it actually takes the reduction and you can push it forward into future years. So you need to, but you still need to file the taxes. The IRS really doesn't like not knowing what's happening. They're fine if they know what's happening, but they really don't like not knowing what's happening. So you do need to file everything, even if you're losing money.
Do you have a checklist or guidance assisting with how to structure your tax package to an accountant?
Your accountant probably has a checklist. Most accountants I've worked with have some kind of form they want you to fill out with how they want you to provide them the information. So we've not bothered to put such a thing together because everybody wants the information to come in the way they want the information to come in. But if you are working with an accountant, you can certainly ask them for that. And every single one I've worked with has always had one.
Okay. Can you talk more on 1099 for lawyers? What if you forget to set it? Can it still be deducted on taxes?
Technically, if you don't send it, you shouldn't deduct it. This would be a gray area. I would say it's always better to send it late than not send it at all. I probably wouldn't send it for like previous years at this point, but if you get to March and you go, oh, I didn't send a 1099, send the 1099 and then check off that you sent it. You don't actually get asked on your tax return when you sent them. You just get asked that you sent them. So they would rather have the communication than not. The IRS would. In terms of if you can't send it, so let's say the lawyer refuses to give you their information, I would still take the deduction. It is a business expense. It's totally legitimate. We just want to send the 1099 if we can figure out how to do that.
So someone is trying to figure out what software or apps they should use. So I looked in the Apple Store and saw 6 apps for tracking, planning, and receipts. Any thoughts about these options? QuickBooks for self-employed, spending, Mint, Money Manager, Every Dollar, and Smart Receipts.
So
And there's someone else also asks about Xero.
Yeah. So we only work with QuickBooks. And the reason is because it's the only software out there that I've found that actually has a reconcile function. The reconcile function should be separate from the categorization function. So you bring in your transactions, you categorize them, and then separately you should reconcile them. Everything I've looked at besides QuickBooks, including Xero, they call it reconciling, but it's not. They consider it one system to make things simpler. I understand why they do that. It makes it less complicated. It also means that errors are far more likely. There's no checks and balances. I don't like systems with no checks and balances. So my inclination when and let me be so clear, I don't love QuickBooks. It is often not a great product. It's really hard to use. It's far more complicated than it needs to be. The user interface is often really terrible. And it is the only product out there that does a good job at it. So that's why we work with QuickBooks. We worked with Xero for a while and stopped because the no reconciliation became such a huge problem. We were having to manually do it every month and it was just a nightmare. So in terms of those 6 apps, Mint is a personal app that's put out by Intuit, but it's geared towards tracking your personal spending. I would recommend QuickBooks for self-employed. It's actually a far simpler product than the real QuickBooks. It's also much less expensive. There are limits to it. I think you can send like a max of 6 1099s or something. It's not, there are limits to it. But if I were starting out a small business and didn't need to track a ton of data, but just needed to be able to pull good reports, I would go with QuickBooks for the self-employed. Mint is just a different thing. I am not familiar with spending, Money Manager, Every Dollar, or Smart Receipts. But what I would look for is a system where you can track your spending, that you can compare it to your bank account and make sure that everything got captured, and that you can create your own categories for spending so that you can see, so you can break it down and not get stuck in that miscellaneous place we talked about earlier.
So we have a couple more questions. So I just want to point out, someone shared that Linda, you can access Linda for free through the public library system in DC and Montgomery County. So that's a little tidbit for everyone. Here's a question. If a client never tracked, coded, or categorized any expenses, and they don't remember exactly what expenses, what their expenses were for what, where should they start?
So typically what I would do is I would start with a bank account and we'd get as close as we can. So anything that happened electronically, then obviously we know. I am noticing that the next question is that from the same person, that they operate a heavily cash-based business. So it sounds like there's a lot of spending and receiving going on in cash. But what I would typically do is start with the electronic. Let's get what we can get. Then let's understand what income we know we have. Let's understand what cash we know we have at the end of the day, and let's figure out where the cash went in between as close as we can get it. Often in those circumstances, we don't end up capturing everything, but some starting point is better than others. And at the same time, what we often do is put in systems to make sure that we don't end up having to face the same thing next year.
Here's a question. Do you have any recommendations for CPAs?
I consider CPA coordination a bit like matchmaking. It's not, I would need to understand what your business is. I mean, I have some CPAs that will do a great job with an individual, and they'll charge, $1,000, $1,500 to do that. I also have some CPAs who won't look at anything for less than $6,000. I'm not bringing those same people to the same, right? They just provide a different service. And so I don't have any off the top of my head who I would just throw out there without knowing more about your business and what would what you're looking for in a CPA.
Okay, here's, as a single member LLC, I've taken the route of using Excel to track expenses because most tax appointments will be virtual. What do you suggest in submitting copies of receipts? I'm looking to upgrade to QuickBooks very soon.
So in terms of receipts, I would say make sure you have them in a place where you could access them if you need them, but the odds are that no one will actually ask you for your receipts. It's a lot of paper that if they do, they're just trying to verify some big expenses that they would need to categorize typically. But in general, I would just say, hey, I have everything saved in this file here by month. If you need the receipts, they're available. But I wouldn't worry about transmitting them until the accountant asks for them.
Let's see, as a sole proprietor, is it sufficient to keep a dedicated personal savings account for all and only business transactions and tie that to a dedicated business credit card? Or do I need business checking and a savings account?
You don't need checking and savings, but you should always have a business checking account where all of your spending for your business stays in one place. And if you want to separate out and you should have a business credit card. Now it could be a debit card from your checking account, or it could be purely a business credit, a separate credit card. It also doesn't have to be taken out in the name of the business. So you could take out a personal credit card or take one of your existing personal credit cards and say, okay, from here on out, I'm only using this for the business. Where the credit comes from isn't important to me. What is important is the consistency of how you're spending on it, because it just makes everything 100 times easier to track how the spending is working.
So we have two more questions in the Q&A, and I think we have a couple of questions in the chat. We might be able to get one or two in before we close out. Just as an FYI to everyone, we will make sure that we give you Mallory's contact information in our follow-up email. It's also in the chat as well. And you can also go to our website, Office Accomplice. I believe Raina put her link in the chat as well. Here's another question. Apologies if this is too specific, but do you know how to account for credit card interest in QuickBooks? None of the form explanations are straightforward.
Yes, I would just call it a bank fee. Technically, this is, again, we're in gray area. Technically, the interest is not all deductible from businesses. I think, though, that if you spent the stuff on business, then you should count it. So if you put it in as a bank fee, then it's in there. That's gray area though, right? Because it may or may not count based on what you bought and how you did it and how the credit card is taken out. So if you're not comfortable with gray area, then you just can't track it. You just can't count it. It counts as an owner's draw. But that is a gray area that I feel pretty comfortable with.
So Jennifer's indicated that she has never tracked her financials, and she wants to know how many years should she go back to create her financials?
So that would, I guess my question back would be, what would be the goal in going back further than last year? So if you are creating financials for the last year and you're going to file taxes for your business for 2021, then that makes sense. Going back further, unless you're going to adjust your taxes that you filed, there's no value there. And so I just wouldn't bother with the time and the stress that's going to come from that. I would just go ahead and you are where you are now. Let's just try to do better from here. And start tracking them this year for sure. And last year, if you can pull it together.
I need to generate financials to get bonding. Will QuickBooks, apart from bookkeeping service, help me do this?
Yes. That will help you to generate any financial records you need.
If you have a physical office, but also use your home office, a separate office space within your home, are both deductible for a single member LLC?
Yes. The office in your home can only be deductible, assuming it's never, ever, ever used for personal purposes. So, again, gray area, right? Is someone ever going to come in and look at your office? You have to decide. I personally don't take them because that closet is a camping closet and there's like exercise equipment on the floor behind me. So this room is not just used as an office. And I've found that more stressful, that the idea of doing that. And again, that's just a matter of figuring out the gray area that you're comfortable with. But the more conservative answer is, if anything else happens in that office, if you go in there to pay your bills, your personal bills at your work computer, technically you didn't 100% use it for work. Like, it's really gray area. So that in terms of, can you deduct both? Yes. And deducting for a home office is actually really hard to do outside of the gray area.
So last year I had to switch from a virtual office through Regus to co-working space. My cost per month went up by 5-fold, $370 a month. Is this deductible?
Absolutely. If you used it for work, it's deductible.
I'm checking to see if there are.
And also you should check with your accountant. You should always check with your accountant. I'm not a CPA.
So I think this may be the last question. Any recommendations for using receipt software to create PDF files from paper receipts that can auto categorize the output into categories like auto, office, travel, business, meals, etc.?
Expensify is the one that we've used. I haven't tried any of the others because Expensify works with QuickBooks. And so that is the one that we've used because it'll feed in automatically. But it's great. Expensify is really great. You just take a picture of it with your phone. You tag the categories you've set up in advance, and it categorizes everything.
And then here's a different question here in the chat. I'm a sole proprietor and thinking about incorporating as an LLC. How much different will the taxes reporting be, or reporting your taxes be?
It won't actually be significantly different. All LLC does is it still functions as a sole proprietorship from the tax perspective. All it does is it gives you some legal separation should you need it from your business. So I would highly recommend becoming an LLC over a sole proprietorship. I think the difference in cost is like $150 per year, but what it does get you is just that much more legal protection should something happen, and I find it incredibly worth it.
And then I think Carla asked the question, but you've answered it in a previous one, but she asked it again. Can I use a free IRS tax prep software if we are married and my spouse is self-employed making and together we made 60,000? Do I need an accountant?
Assuming that everything else is very, very simple, I don't think you would need an accountant to just because your spouse is self-employed. I think that the TurboTax, again, if everything is, you can find your income fairly simply, the expenses are fairly simple, then I think that as long as, I guess I went with the word concise earlier, right? As long as everything's fairly concise, then I would just use TurboTax. I would really, really hate to have you pay someone to end up paying the same exact amount in taxes because there's no room for how you think about things. In terms of whether they can be categorized as something different than income. So if that's, I think that should work fine. But again, it's really hard to say without a lot more data.
Excellent. So I want to thank everyone. I especially want to thank Mallory. This was excellent. And thank everyone for joining us and posing your questions for her. We will share a copy of the PowerPoint presentation and also make available the recording from today's webinar. And we'll provide her contact information for those who weren't able to get it in the chat, but I believe it was made available a couple of times, but we'll still share it. And we want to thank you for your time and hope all goes well as you file your taxes and be patient. Mallory, you want to say anything as you close out, as we close out?
I want to thank you. This is something that's really hard and complicated to figure out and navigate when you're starting a business or even when you've been doing it for a while, but have had no guidance. And so I want to thank CNHED for hosting this and being willing to answer these questions for people. I think it's important.
Great. Thank you, everyone. Bye.